For decades, we've been told that standard investment advice is the way to go. But what if that advice is running on corrupted code? What if the system you've been told is secure isn't? Welcome back to WealthPrint. If you're new here, I'm Jennifer. Thanks for clicking on this video. Today, we're not just going to give you advice. We're going to install a new security protocol, one built for a world of digital threats and, guaranteed inflation. Just to be clear, I'm not a financial advisor. This video is based on my personal insights and experience. Always remember that investing carries risk, and it's best to consult a licensed professional before making decisions. So let's just run a quick diagnostic. That safe 40% of your portfolio, the part that's supposed to be your firewall, is it actually holding or is it a backdoor, silently corrupting your entire system from the inside out? All right, Section 1, the 60-40 myth. Before we could even think about installing an upgrade, we have to decompile the old legacy code and really expose its core vulnerability. So the manual they give you, right? 60% stocks for growth, 40% bonds for safety. Sounds great, but on the live network, in the real world, that safe 40% is an active vulnerability. It's a single point of failure that really compromises the entire structure. Okay, we've isolated the bug. We call it the inflation glitch. It's basically this nasty line of code that rewrites your greatest asset, safety, and turns it into your biggest liability. Let me show you exactly how it works. That 40% is usually made up of fixed income, government bonds, and they're always sold to you as risk-free. But this is a misdirection. The real risk was never default. The risk is a guaranteed loss of your purchasing power the moment inflation starts running hotter than the yield. Just look at the data stream right here. Your so-called risk-free bond yields, maybe 3.5%. But the true inflation rate is hitting 5%. The system is running at a deficit. You're not standing still. You are actively losing ground. So the whole premise is just fundamentally broken. The safety net you were sold has been systematically perforated, often by the very entity that's supposed to be controlling the money supply. So, if the old code is broken, what do we replace it with? Well, it's time to install a new protocol, a 4-part portfolio designed for resilience, for protection, and for real growth in today's world. All right, installation begins. Module 1, 50% allocated to the S&P 500. This is the core processing unit, the engine that's going to drive your long-term growth. Next, we install a risk management layer. 10% goes to international stocks. This diversifies our exposure beyond just a single economy and a single currency. And honestly, it's a critical update that so many investors miss. Now for the system firewall. This is a major architectural upgrade. 20% is allocated to gold. And listen, this is not a growth module. Think of it as a hard-coded insurance policy against systemic currency failure. And the final 20% completes the protocol, the opportunity bucket. This is your tactical allocation. It's like a sandboxed environment for your high-conviction plays that can operate without risking the core system's integrity. So that S&P 500, that's your core engine. And here's the beautiful part. It's a self-optimizing system. You don't have to guess which companies will win. The index automatically cycles out the weaker ones and integrates the stronger ones. You are always holding the market leaders. That 10% in international stocks, think of that as your redundancy protocol. It hedges against that single point of failure in your home economy. By diversifying across different currencies and economic cycles, you just reduce your dependence on a single power grid. Gold is the system firewall. See, central banks can print an infinite amount of currency, which is the root cause of that inflation glitch we talked about. But they cannot print gold. That makes it the ultimate hard asset, an absolute defense against currency debasement. And the opportunity bucket, well, that's your sandboxed environment. This is where you run your high-risk, high-conviction programs, whether that's crypto, specific tech stocks, or commodities. The key is that it's contained, ensuring that even if a bet goes really wrong, it will not breach the core portfolio's defenses. So we've installed the protocol. Now let's look at the system architecture and understand why these 4 components, when they work together, create such a robust and resilient structure. The whole architecture is built on 4 pillars. You get growth from the market's core engine, protection from a non-printable hard asset, diversification across global networks, and flexibility through a tactical, sandboxed unit. This isn't a system designed for just one outcome. It's designed for resilience against many. But even the most perfect system has a final vulnerability. The protocol is installed, but the biggest threat isn't in the market, it's in the user. We need to debug our own behavior. The protocol itself is pretty simple. The code is elegant. So we have to ask the final question, why do most installations of this system ultimately fail? It's because the code is simple, but the human operating system is not. We're just prone to bugs, panicking during crashes, trying to outsmart the market, pulling money out at the worst possible time, or just getting distracted by the daily noise and overcomplicating a simple process. The most difficult part of this entire protocol is not the installation. It's having the discipline to let the system run, to just trust the architecture and not interfere when things get volatile. And why is that discipline so difficult? Because the mainstream systems aren't built for your protection. As the source material says, the system is designed around financial assets, not real protection. It is designed to keep you in the game, not necessarily to help you win it. This four-part protocol is a new architecture for a new reality. The logic is sound, the installation is simple. The final vulnerability is not in the code. It's in the execution. You have the protocol. The only question is, will you run the program? Before you go, make sure you hit that subscribe button and join the WealthPrint community. Thanks for watching. I'm Jennifer, and I'll see you in the next video.